Good morning and happy Monday, traders. Welcome to the weekly outlook. This is Chris Pulver here. Let's talk about all things stocks, forex, and cryptos. It's going to be a very important week and a lot of movement ahead. Protest for profits still going strong. I did take some profit today on the Swiss yen and the CAD yen. I'm looking to take some profits here in just a little bit, probably on the day for the dollar krone. So we have some currency pairs we're going to talk about today. I'd like to take a look at the SPY, the QQQ, stocks in general. We've seen tech sell off over the last couple of weeks. In fact, we do have the overall stock market again finishing negative with last week's close. Dow Jones finished essentially flat at 0.3% in the red. The S&P 500 was down 2/3 of 1%, and the Nasdaq down just over half of 1%. Bitcoin and other cryptocurrencies found some support. Bitcoin closed last week up 5.5%, or just shy of 5.5%. Big news with TikTok. Looks like it's going to become Tik Tok Global from the help of Oracle, Walmart getting in on that, as well as China-owned ByteDance. So it's going to be a bit of a mix. It could be a majority U.S.-owned company. TikTok, as we know it, is very different in the U.S. than it is in China. So still things going through. There's a bit of a flip-flop there on Trump's side from its banned altogether to allowing it, to giving it its blessing, to now, in today's open, we're looking to see what Oracle is doing. So I actually want to get into Oracle, some stocks, the indices, some currency pairs, a lot of stuff to talk about today, and a busy trading week ahead. And we're getting some partial payouts, which is really exciting. And one more thing, my protest currency pairs, the Aussie CAD, the Aussie dollar, the Euro Swiss, and the dollar Swiss, we're going to take a look at all those because the Aussie dollar is starting to break form, which is awesome to the downside. And my little built-up position, I'm looking to add to it and see that Aussie dollar continue to drop. So let's get to it. Before we jump into the charts, please understand there's risk in trading. Trading involves substantial risk. Please do not trade with money you cannot afford to lose. It's considered risk capital and will always be risk capital only. If you're following me out there on social media, my YouTube channel, just type in my name, Chris Pulver. I post these videos on my YouTube channel along with my Keep It Seriously Simple video series. On Facebook and Twitter and Instagram, you can find me as well. These videos also make their way onto IGTV. You can follow me at pulver.chris on Instagram. And one very exciting announcement this week, Friday, Saturday, Sunday, I will be participating in the Traders Summit presented by Pepperstone, my friends at Trading Indicators, FX Street, Live Squawk, many others. A great list of panelists. I am one of them. Like I said, I'll be doing a power hour on Friday, the 25th. My session starts at 12:45 p.m. Inside the show notes, in addition to smashing the like button, subscribe to my YouTube channel. Check out the show notes to see the registration link. It is free for everybody. I would love everyone to attend and say hi. A great panel, like I said. You're going to learn a ton. So that is going on this week, Friday, Saturday, Sunday, the Traders Summit online conference. So from the convenience of your home, everything will be recorded. Recordings will go out to those that register. So please sign up for that Traders Conference, and looking forward to seeing everyone in there. And for additional free education, you can find my video series, Keep It Seriously Simple. Things like equity management, how to grow your account, adding to winning positions, trend lines, support resistance, finding the best broker, you name it. I'm trying to put it out there on YouTube for free. So check that out on my YouTube channel. Let's get into the charts. Enough of this maintenance stuff. Let's go right to it. This is the SPY. So big break last week. So Wall Street just opened and we are bearish on the day. I'm actually pretty excited about this. It just seems like a sobering dose of reality that the stock market can actually sell off for real. And so we had the structure put in right here. And I thought last week, like this was going to be an important high to low. In last week's weekly outlook, I talked about the significance of this area. If we expected to see price do something like this, stay at these lows and use that low to bounce back up to those highs and test the backside of the trend line, or does this support give way? And it seems to be the latter, and we are bearish on the morning. If I go into the dashboard, you can see that futures is down. Futures, going to it right now. Dow Jones futures down 2.5%. S&P futures down over 2%. NASDAQ creeping up 1.75%. Gold is down. Wow, big. $42 to the ounce down on gold to $19.20. Silver down to 26. Oil down below 40. U.S. markets opened bearish as expected. Futures was heavily down. Dow's down over 2%. S&P at 1 2/3%, NASDAQ down 1%. I'm going to take a look at Oracle here in just a little bit, but this is the structure. Now take a look. Where could we be falling? The posture is red. The trend line break is official. We are breaking this support level. Look, I am actually happy to see that the markets are willing to slide. Now, we had so much concentration in big tech. We had our 4-to-1 split in Apple. We had a 5-to-1 split in Tesla. We had Amazon off the highs, Netflix off the highs, Facebook, Google off the highs. Everything was kind of sliding as tech was falling, so was the stock market. It's actually kind of nice because, look, I'm looking for dips to buy. Now, is it right now that I'm looking to buy it? I hope not. I really hope that we can come down into this area here, finding a higher low. If it is catch a falling knife, then I will wait. And this indicator you see on my screen is called a high octane indicator. This is one of my favorites, kind of all incorporating indicators for waiting for confirmation. So right now, as this is dropping, I am short the stock market. As this is dropping, I am waiting to buy dips. As this is dropping, I'm taking a look at my volatility plays like the VIXI and the VXX. Are they going higher? Let's take a look. So the VIXI is at 2107, a gap higher. We have highs all the way up towards 2750. Let's see if we have a selling, sliding stock market allowing volatility to increase off of these higher lows. We had lows back here in March before everything erupted with coronavirus and everything else. We have higher lows right here. Can we come back into equal highs at 2750? Can we break this trend line structure? Look at this little channel. If we break this channel, I would say that the VIXI, the VXX are able to run into equal highs, testing probably the mid 30s. So I'm holding a position right now at 2230. I do have pending orders again at 15 and 11, so I'm looking to build a little position, not super long term, probably over the next 1 to 3 months, holding the VIXI long. I'm just buying the ETF VIXY and trying to take this up towards $35 or higher, and then I'm going to look to take some profit. I have the same thing running on the VXX right here. VXX is a little bit higher. VXX is also from current price. It is sitting at 25.74. It did gap a little bit higher. Confirmation is up towards 31. So you can see I have very similar structure. If I just draw a trend line here, let me go ahead and dot that guy. Some trend line structure right in here. So can we break that trend line structure and push higher? We will find out. We're off of equal lows right here. We're at higher lows. It's certainly going to take a bullish nudge to the upside, but this high is around $31. I'm looking to see if the VXX can get back into the mid 40s. So VXX, my target's $40 to $45. The VIXY, my target is $30 to $35. I am long on both of those ETFs, like I said, for the next couple of months through Q3, starting Q4. Let's see what the election gives us. If we have higher volatility, good or bad movement for the stock market. Obviously, if volatility is going to get higher, we're probably going to see a continuation lower in the stock market. So we looked at the SPY earlier. Let's take a look at the NASDAQ or the QQQ. We can also take a look at the Russell, which is IWM. Q is right here. That was the structure I highlighted last week, and we are pushing lower. Now, it was an important close last week. Look at Friday's close. So we were clearly in the red, but pros closed and pushed it back up into this area. Today is the same thing. I want to zoom into this price action because we gapped lower. Now, what's going to be interesting is if we push lower, but this may close with a bullish candle. However, it's a critical level of support that's breaking. So what would be kind of nice is to see maybe we have price pushing up today, but it closes with indecision. If we break that low, I'm going to be looking to sell and continue the pressure on the Qs, continue to pressure tech, continue to pressure the stock market in general. Now, if we come right back up and we scream back above the support with a bullish candle above it, then I would say, you know what, the market might be putting in a dip to buy, because off these lows, I believe this high to low slide was around 11%. So I'm going to see where we exactly are off of this high. Around 303.30, so 303.30, and we had a low. Let's just go to last week's close. Last week's close is 266. Okay, so minus 266.76. So we're around 13.7% off of the highs. So that is, again, kind of correction territory. Can we buy the dip? We'll find out. But again, if this stays red, this is my high octane indicator. If this stays red, which right now it is, if it stays red, the pressure is on to the downside. So like I said, it's going to be important to watch today's close. If the bulls can close back inside the support level, which is around 266, if we close back above that, we might be carving in some lows and starting to push our way back up. if we stay with a wick high, even if it's a bullish body and a wick low, that indecision probably means a lot of pressure to the downside if the bears continue to press lower. All right, so big stocks I'm going to be watching. I will be watching Apple, of course. So Apple is sitting right now as the market opens. Apple is sitting at 107.50. Okay, I did actually put in a buy on Apple right at $100. So again, I might see a short-term pop in this one. We might get the $100 level to hold in the short term, push right back up into this previous high, which is around 120. But it will be important to watch how the QQQ closes, because if we see some indecision in the Qs, then maybe Apple just continues to slide back into this area. This pocket, this gap is filling around $96. Which is fine. And then if we fall any further, we look left on our chart. Let's just zoom out. Previous highs around 80 bucks. So if we can get through $100, I think it's pretty easy for this momentum to continue. This is obviously a big slide. Perhaps it's high, low, a pullback, but that could be a sell the rally move back down into this $80 area. So currently, with my position at $100, the shares that I added, I might take some partial profits and close some partial shares. If I get a decent jump from, let's say, 100 to 120 or so, I may grab some short-term profit and just brace for more downside, kind of fingers crossed for more downside, because I can take some profit there on any jump. If it slides back in sub 100 back into 80 bucks, I'll just start looking to build again. And from my indicator, I'll just look for high octane to turn green. If it turns green here and it goes lower, turns green again, goes lower, turns green again, I'll build a position off of Apple. I'm fine with that. Same thing with Amazon, same thing with Microsoft. So let's take a quick look at those stocks really quickly. Here is Microsoft. Microsoft is at 197. I put in a little position at $200. I told traders now for weeks, if we get back down to 200 bucks or lower, I'm going to start buying some small positions on Microsoft. So here we are. I mean, currently at it, it's right around 197. I will look to see what happens on the jump. If we jump right up here towards, let's say 210 to 215, that again might be some short-term profits. This is actually shaping up to be a potential bearish head and shoulders. Look at this neckline right here. So if we have left shoulder, head to neckline, right shoulder, I might take some profit at this right shoulder and see if this then breaks lower. Okay, now would I short Microsoft? Probably not, but I would take some profits here on some partial positions and shares and look to see if this is going to indeed break this neckline, become a bearish head and shoulders, and to fulfill that, we're looking at levels all the way down into here, I would say between 170 and 150. To fulfill that bearish pattern, and I look for high octane to turn green, so I want to see confirmation for bullishness to start buying positions into that window. So in the near term, maybe I get a jump this week on the stocks, maybe I get an overall jump in these little ETFs and indices, and that might be enough for some short-term pops on Microsoft, Apple. Amazon is another one that I bought last week. And again, these were just kind of added shares and testing levels, and I'll probably close for some partial profits. So let me check AMZN. And we're trading right now at 29.09, and the movement on Amazon actually looks a bit more accelerated. So, I know that Amazon's trading way above its PE. We had highs around 35. We're down to, just below 3,000, 2,900. Big levels I'm watching, 2,500 and 2,000. I did take a little chunk last week right around that 2,900 area. If it drops a little bit lower, that's fine. If we have any wave pattern, maybe a slide, maybe a pullback. Okay, now this could be similar structure. This could be a crown pattern where if we slide a little bit lower, we have a pullback in the short term. This could still be a bearish move, which I'm totally fine with. But if we have a jump in the near term, I'll probably get some partial profits and then just look to rebuild. Look for high octane to turn green at 25. Look for high octane to turn green around 2,000. Get back into this previous structure in here. Only look to buy. And I'll just wait. I'll be patient. So some big stocks, some healthy stocks, some big companies, competitively advantaged companies. I'm happy to see that there's a correction. My gosh, it felt like it was impossible to participate in anything. But right now we're looking at a good company with not necessarily the right market cycle. This can continue to slide down towards 25 or 2,000. And again, we'll see how drastic the slide is. If it is a slide here to break these lows and then there's a short-term recovery, well, that's okay. I might grab some short-term profit there, wait for this to fulfill, and then I'll start looking for my green and bullish indications to buy at better prices. So at the end of the day, it's fine. I like companies like this and I'm going to stay in and hold. But if I've got some short-term profits this week, maybe 15, 20, 30%, I will take it and then look to reallocate, cash and margin elsewhere at better prices. Meanwhile, my protest for profits currency pairs, let's take a look at the Forex market. My Aussie dollar. Aussie dollar, what are we doing? We're finally breaking. The rising wedge is looking like it's giving way, and I love it. So here we are with a nice bearish candle to the downside. Love the setup, love this move. All this indecision, couldn't break the highs. Finally, a nice convincing candle. Obviously, the day has to continue. Monday's close is 5 p.m. Eastern time. I want to see, does it close here? Take out this 71.90 level. That should be around 71.90. Let me confirm that. I believe that low is exactly like 71.92. That low is 71.91.7. So yes, 71.92. I do have some positions stacked right there to sell and sell and sell. This rising wedge pattern typically means faster movement to the downside. It's taken a long time to finally get this nudge. If we close outside this rising wedge, I'm looking to continue to work this area. If we break, retest, I'm still going to sell the highs. If we break this low and we flag, I'm going to continue to sell these lows. I'm looking for price to get back into this area right in here, which is around 68.50. 68.75 is a monthly target. 6,800 is a round number. This pocket is around 6,700. Love these spots for the near-term move on Aussie dollar to show some corrections. Okay, so hopefully this plays out and pays out, allowing me to clean up a little bit so I don't look like a hobo. Aussie CAD, same thing. A lot of indecision. Not as big of a drop to the downside. You don't see the trend line breaking just quite yet, but still a promising sign off of equal highs to look for the Aussie CAD to drop and break down lower. So I am trying to continue this lower. Obviously, a great level on this one would be breaking this trend line, clearing these lows around 94.25, and see if we can fall back into this previous resistance to become support around 9,200. So I like Aussie CAD. Let's get some more confirmation. Aussie dollar looks fantastic. Aussie yen also looks fantastic. A great break of this trend line. This is also a very clean looking rising wedge right here. And I've had that on my MetaTrader 4 platform for a long time, and it looks great. So we have red confirmation on my high octane. We have price outside the right side of the trend line and the rising wedge. To me, a conservative level would be we break, we pause, we go, we break, we pause, we go. We have some breakouts. We have some bear flags. I'm looking to get back into these lows, which is around 7,300. I'm looking to get back into this pocket zone, which is around 7,200. So anything into this window, I would be taking some profits. This is a great time to deploy some robots. I redeployed my sentiment strength line auto on a 1-hour chart. I'm using a 10-line setting, and this might sound Greek to many of you or alien for many of you if you speak Greek. But I'm looking to use a robot to get in to participate with this downside. Right Trader Max is another system that is awesome to the downside. I'm looking to just sell, stay in, participate, but it's now a sell-only deployment. All right, so we do have some trades that have been running with robots. They're picking up some steam, and this confirmation is looking really, really good. So Aussie dollar looking great, Aussie yen looking great, Aussie CAD looking better. Let's go to the dollar Swiss because the euro dollar is also dropping. So that means that my dollar Swiss is rallying, and I'm looking to get the dollar Swiss back up towards 93.50 right in here. So I do have some levels that I'm watching. I want to see if I can stack some orders in this area right here. So I've already built a little position. As soon as we had an aggressive drop, I have a small position in around 95.50, another one around 92.50, and then 9,000 I started to build off of these equal lows. So my break even's pretty close to current price. If we get a nice little pop towards 93.50, I'm going to take some profit on the dollar Swiss and be happy. I told traders this last week, and everybody followed along. They all got it, which is awesome. If we go to 93.50 on the dollar Swiss, that should be the equivalent of 1.15 on the euro dollar. So if this continues to push upwards, expect the euro dollar to push downwards. And that downward pressure would push the euro dollar into, like I said, around 115. And so whether you're long dollar Swiss or short euro dollar, both trades look fantastic for some profit. So I am short on the euro dollar. I am long on the dollar Swiss. And hopefully, again, They will both pay out here in the next week, maybe this week, maybe next week, but looking good to hopefully finish up the quarter with some risk-off trading, some dollar strength in the near term. Let's see what this old dollar index is made of. So, too far, too fast. Nice little pocket zone around 12,208 on the US dollar index. It would be just a little reversal pattern, something like this. Can we just break this structure, pop right back up here, previous support, nice little pocket zone around 12,200, just above that. And again, if that's the case, if we come up to this area, that's kind of my target one. If it goes up any higher into potentially this area, I'd say that's target two. Now, I have been near term dollar strength oriented. So I do think that in the near term now, we're looking for some dollar strength. If we get it, make sure that you're protecting those profits. I'm not looking at a bunch of dollar strength. I'm looking at kind of corrective dollar strength. But these corrections are also, because it sold off so quickly, we have some decent pips up for grabs in the Forex market with that dollar movement. Okay, so that's looking pretty fantastic. Dollar Swiss is one of my protest pairs. Euro Swiss is the other one that actually is a bit of a reset right now. I did take an add-on position around 107.50. I was hoping we could have another short-term trade towards 108.30. I'll just hold this. I just added to it. If it gets up into 108.60 or 108.50 again, I'll probably take another chunk of profit there. That's fine. I'll wait on that one. But meanwhile, we've got other ones that are paying us. Speaking of paying us, I did take some partial profits today on the CAD yen. I was looking at the CAD yen to get into 7,800. It's currently at 78.70. I took some profit off of today's lows or near today's lows around 78.50. In fact, I closed up around 78.57, which you can see here is just a few pips off those lows. So low is 78.51. I closed up near those lows. And all I was looking at, and traders knew this very, very well, if we started to see some indecision, which we did, we were looking to short that breakout back into these previous lows. Price is close enough to take some profit on that CAD yen sell-off. Another one that I'm short that actually is working out fantastically well is the Swiss yen. So I'm short Swiss yen, looking to stay short Swiss yen. We came right back into previous resistance, becoming support around 114. I have way too many lines on this chart, so let me go ahead and trash those here. There we go. And I'm looking for a big structure on this Swiss yen. A lot of resistance right there. And let me just mark some pretty monster support. So major support down here. Okay, so we have some intermediate levels. I think it's pretty clear that that 114 level could create a bounce. I'm still going to keep some pressure on the Swiss yen. I think that sliding here, we had a nice crown pattern. Okay, left tip, center tip, right tip. We fulfilled that crown pattern. Now let's look and see if it plays around in this area. If it's consolidation, fine. If we break and close below 114, keep the pressure on this currency pair. I think from 114 all the way down to this low around 110, I think it's very feasible for the Swiss yen to continue to slide. So I am short on Swiss yen, and it's paying out nicely. I did take some profit on a couple positions. I'm looking to add on pullbacks or add on bear flags as we get below 114. Another pair that's adding some pips is the dollar krone. We have been long on the dollar krone for a while. You can see I have some positions running. They are running and running nicely. This is making its way very quickly up into 9.35. We're looking to get profit up here around 9.6. 9.68 is where my robots will turn itself off. Currently, I am in several positions here and adding up some pretty serious pips. So this is a trade that's in profit currently for around 335 pips. This trade is up over 1,000 pips. That's around 1360. And this trade here is up around 21. So between those three positions, I'm up around 4,000 pips. So I am going to go ahead and take some short-term profits off the table. Close this one up for a quick win, close this one up, close this one up. And again, let my robot continue to trade, which means you can look on your chart, see this breakout point. So if we are breaking higher and we pull back again, I want to buy some dips. I want to stay long on the dollar krone until we hit 9.6 or higher. Okay, so in fact, I think I can do that right here in this video. Let me go into my VPS and let's take a look at my positions. So I have these two positions running as well as a manual position running. I'm going to go ahead and take some profit. So currently this one, like I said, I can close this one up. This is up, I believe, around 1,300 pips. That's 1350. And this one is in some profit as well, around 2240. So 1350, 2240. I'll take it. I'm going to go ahead and close these up and let my robot continue to trade. So this is the same trade size. So I'll take the first one. Let me see if I do this right with FIFO. So let me close this one. Hopefully there's no error. Good. So that trade closed. and that trade closed right here. There we go. And this will continue to run. My robot is looking for this. I'm going to change the color on my drawing tool. If I have price pull back into my blue ribbons for support, if we pull back into this price level or this pocket level in the near term, I'm looking to see with the bulls, if we can pull back, find some dynamic support and push higher, take another buy trade this thing up towards 9.6, 9.68. That's what my settings are on the robot to take all profits and turn itself off. So just to show that right here, this is Right Trader Max. I have my profit level at 9.68. So if we hit that price level, my robot's going to take all profits on open positions and stop trading. No more trades once we hit 9.68, and that's my plan. Okay, I also have this trade here. I'm going to go ahead and take this one off the table as well. So that is, I'm trying to find what account that is. That's in profit. I think that's a sentiment strength line trade, which I'm fine with. I'm going to take a look at that one in a moment. That's up about 300 pips. But we should still be bullish on the dollar krone. I'm bullish. Took out those partial profits for around, let's see, those 22 and 13. So like 3,500 pips. I'm going to keep adding to it until we get to 9.6 or higher. So CAD yen taking profit, Swiss yen taking profit. Dollar krone taking some partial profit. Those are nice little partial payouts. It's not enough for me to say that the protest is done. Okay, those aren't my protest pairs. Those are just good trades, working out, getting some pays on those, which is fine. Aussie dollar looking much better. Let's go Aussie dollar. Euro Swiss, let's see what happens. We still have to get that break above 108.30. Aussie CAD starting to turn the corner. Aussie yen, I like to be short. New Zealand yen, I like to be short. Let's see what happens this week. One quick thing I'll check before we go is the economic calendar for this week. And I just noticed lots of speeches, lots of statements this week. Christine Lagarde from the ECB, Powell, a couple of days. Actually, Powell's speaking on Tuesday about the U.S. CARES Act if we're going to push through another Corona package or stimulus package for the U.S. We have an RBNZ rate decision on Tuesday evening. That's 10 p.m. Eastern time. Rate expected to stay the same. Is the RBNZ going to release a very dovish statement? If so, expect some more dovishness to come out of the RBNZ and see the New Zealand possibly get a little bit weaker. PMI numbers coming out of the Eurozone on Wednesday. That's starting all during the London session, so 3:15, 3:30 Eastern time. That's around 8:15 and 8:30 UK time. We also have Powell speaking again. He's due testifying economic impacts of COVID-19. Man, he is having a busy week. So I'm sure the market's going to take notice. And then we have the Swiss policy assessment. Come on, Swiss. Say we want our currency to be super weak and we want the Euro Swiss to be at 1.20. Let's see something out of the Swiss franc this week. And then Powell again on Thursday. Man, that guy's just getting worked. So, look, I think that just a short explanation on the Fed is interest rates are going to stay low, near zero for 2023. But the Fed is not going to be blamed for any market correction. The Fed is not going to be blamed for a lack of effort. We have a lot of other things out there geopolitically, uncertainty-wise, that are all causes for the market to slide. I just think technically it should slide. Fundamentally, it should slide, right? I mean, to have the type of separation, the K recovery we saw this year is insane. So it makes sense that we're seeing a slide. It makes sense that there's some some uneasiness out there heading into the election as things heat up, of course, with that September 29th, not that far away. It's debate number one between Trump and Biden. So that could be like a train wreck. I'm sure it'll be tuned in by millions of watchers, for better, for worse, highly emotional, highly polarizing. But I mean, not that it should be entertaining, but I'm sure it's going to be. So whatever affiliation is and preferences, I mean, I'll be watching. What I'm going to watch is, as I'm watching the debate, I'll watch my phone. Why? Because I want to see what price is doing. The markets could be jumping around with any type of major swings and the poll numbers and whatnot. So anyway, task at hand is trading this week. We've had some good short-term payouts this week from trades on CAD yen, Swiss yen, dollar krone working fantastically well. Protest for profits pairs, my Aussie dollar looking awesome. Let's go. Euro Swiss, I'll keep watching this week. Let's see if the Euro and the Swiss can combine. Let's get that break above 108.30 and let's go higher. Aussie CAD also dropping. Dollar Swiss, let's go to 93.50. And Euro dollar, let's drop to 1,500. Take a look at the stocks, just a quick review, watching the SPY, watching the QQQ, watching the VIXY, watching the VIX, watching Apple, Amazon, everything, right? So if you have to go back and watch the video, do that, because I know we covered a lot in a very short amount of time. Please do me a favor, smash that like button, like this video, subscribe to my YouTube channel, and click on those show more for more in the description section and register for the Traders Summit this week. Again, my section will be on Friday the 25th at 12:45 p.m. Eastern Time. An awesome panel, tons of great sponsors. It's going to be a great event and you're going to learn a ton. So check it out. And again, just register for it. We'll have recordings. So if you can attend at your convenience and attend live, you'll get the recordings. You can check me out, check all the other speakers out as well, and see what's out there for the Traders Summit. All right, traders, that's going to do it for today. Happy Monday. This is the week of the 21st through the 25th. It's going to be a busy week. Let's get paid this week and see how we wrap up Q1. Watch those stocks. Watch the currency market. I'll see you in the trading room, everybody, in my Flex trading room. Take care. See you in the Trader Summit on Friday, Saturday, and Sunday. Have a fantastic week. Happy trading. Lots of profits. Talk to you soon. Bye-bye.